All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and tomorrow is the main event with CPI. Now, if you remember that one trade I had earlier yesterday, I was able to make back about $11,000. Now, why I'm bringing this up? Because a lot of people are expecting some massive moves out of the CPI. I believe last time it was about 7% within 2 days, and then it was kind of a pump throughout the day. We brought this up last month with the CPI, but JP Morgan, they came out with a couple of scenarios, and one of them is that, well, if the market goes below 6.9%, they're giving it a 5 or CPI comes in below 6.9, they are expecting an 8 to 10% move. So I want to go over this. I have my own breakdown and what I think is going to be important tomorrow. I'm glad that they agree with me in some instance where if it doesn't go down enough, so even if we get CPI dropping tomorrow and it is still like lower but not below those expectations, believe it or not, it could lead to a down day. So futures are about to open up. It looks like we're probably going to be around 4,000. We have a lot to talk about. I got the breakdown. We're going to go over the plays. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We are going to be there about 15 minutes before the report tomorrow. That report comes out 1 hour before the bell. So if you want the interpretation in real time and you want to see how we're going to trade it and all of that, I really suggest that we see you there. But it's going to be wild. There's a lot on the table in Chattadonia. It is setting us up for a crazy week with Powell on Wednesday. So drop your thumbs up on the video. Make sure you're subscribed. I got the plays. I got the keys. I got a great play for you, too. It's a lagger. I think you're going to like it a lot, but it is game time, and I hope I see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, I'm going to give you the breakdown, and then we'll go over my holdings here because, like I'm saying, I think it's going to be a big day. The fact that I was able to make as much back as I did yesterday, it puts me in a nice position, but we've been talking about it all day. If you don't have any plays on the board, we may make some pre-market, but what you got to be looking out for now is how to interpret this, and in the back of your mind, I want you to keep in mind that Powell is going to be approaching, but it's very simple tomorrow. I want to start with this. If the report is easy tomorrow, aka it comes in really, really low or really, really high, you obviously know it's good or bad. Watch for the trend that it sets, and it's probably going to continue from there, but I want you to watch every 15-minute increment. You've been seeing me bring this up, and usually that's where the trends continue or they kind of turn around up until the market open. I'm not saying after the market opens, but pre-market, again, it is very, very volatile, so just keep in mind how long it takes for people to digest and then how it plays out. But I think it's going to be very simple. If we have an easy read, if the first candle goes straight down, I would watch for that to continue throughout the day and then lead into Powell. However, if it does shoot up to the upside, I believe the exact same thing as well. Now, here is the next big thing, and I want you to understand 7.3% is the expectation, but the odd part is that 7.2 is literally the lowest. So out of 48 qualified economists, usually there's 62, but out of 48 this time, the lowest estimate is 7.2. And in my mind, that seems very low, aka you have 7.4, 5, 6, 7, I think all the way up to 7.8 to the high side, and there's a lot more people expecting a little bit higher, but the downside, it is not that much. I believe from 7.7 last meeting, if it did come in at 7.3, that would be a 0.4% drop. If you remember the November CPI, that one was about, I think, 0.5 or 0.7%, and that had a big reaction. So believe it or not, even though people are feeling a certain way about this tomorrow, this expectation is pretty low. So with that being the case, I'm saying that the real major bull case, and I'm glad that JP Morgan agrees, it would be anything below 7.3 on the headline, I do believe that that would spur a very bullish reaction. Now, this is where it's going to get interesting. If it goes too low, I think the market might like it, but let's say it goes down below 6.9 and down to 6.5, I think the market might puke after Powell. We talked about this today. In a weird way, if inflation drops way too much, people might get worried about that. But like I'm saying, you'll probably get a rally before that happens, and then that will match up there with Powell. But now this is where it gets interesting because, like I showed you on that pretty picture here, JP Morgan is agreeing. Anything 7.5 or higher, they think the market will drop 2%. And really, I'm saying the same thing here. I think 7.4 or 7.5, I believe that will cause a bearish reaction. Why? Because like we're saying, this estimate is already kind of low. We had a big drop on CPI last time, so if the drop in that velocity slows down, that is not going to be good. But all in all, watch that headline, and now let's talk about what I just said here. The pace is going to be the most important thing. So we're talking headline right now, but you already know the vibes if you've been watching this already and you've been following along. Core has the highest weighting. So even if headline drops, if you watch that core does not go down with it, that will make it a very, very hard reading. But the thing that we are looking for is velocity. So if there is a big velocity from last month and inflation keeps dropping and dropping a lot faster or at the same pace, that is going to be what will keep the market up or down. So this is where it's going to be hard. And really, I'll give you the main key right now. I'm telling you that velocity is important. And how do you measure that? Month over month. So a lot of people in the morning, they will be focused on year over year and the core. But again, these are all yearly metrics. So even if those come in good, if it's really going to be good, the month over month is going to decline a lot. But if we watch year over year decline a lot, I still think it'll produce a reaction depending on if the number is a lot higher or lower than the expectations. However, this is really going to be the sticking point because they want to see the velocity dropping. That is going to be the main part here. So the hard part is really going to be reading. If we get a big headline drop and then a smaller core drop, that will make it difficult to read. And then on top of it, if headline and everything comes down, it could be because of base effects. And that's where now people will look at the month over month. If I see a high month over month, that will caution me to slow down tomorrow. So keep that one in mind. But now, the real paradox of tomorrow is that if the reading is not strong enough to the upside or downside, again, I hope you realize it's very easy to determine good or bad tomorrow. It's really going to fall in line if it just comes in clean across the board. Inflation is slowing down. It's continuing the declining pace. That's going to be easy. If the number stays up and then that means the market overpriced it and was expecting something way better, that is going to be bad. But like we're trying to point out here, there will be specifics that are going to muddy the waters. So if we get something that is not easy to read, this is going to add more pressure on Powell, and it really is just going to increase the odds of us having a bigger swing tomorrow, up and down, while option premiums stay the same price, and then potentially us staying in this same, purgatory hell that we've been in leading into Powell. So hopefully you get all of this. Again, we are going to be there in the morning. And really, the main logic I'm looking for, what makes it good, what makes it bad, what makes it confusing. If you know those things and you know where to watch, that is going to make things easier. And then before we even jump to it, I'll show you what it's going to look like. And you could get this data on Trading Economics. There's a lot of websites where you could find this data when it comes out. But again, we are going to be live with all of it, and you're going to be able to get the interpretation. But here are all of the different factors. Like we're saying, watch the month over month. This is velocity. This is the general headline number that'll get people excited, and core is always going to be the most important. If the reading is not easy, just don't forget about those average hourly earnings. So depending on what we get here, if it is not an easy read, the algos and the analysts, they're going to go one by one. And this is something where just keep your eyes on it, because I'm hoping that if it is a confusing read, I think we may find her out here, or it's going to be hidden within the month over month. So we will see what happens. But Let us get into the plays. But right off the bat, Chattadonia, we're going to go over what I'm holding in here. It's been a wild ride already if you've been seeing, but I did make a couple of plays, and I'm liking a lot of them for tomorrow. And the first one is Tesla. I added 100 shares today near the low. I think I got in about 167.94. Remember, we flipped out the other day, but the thing I like about Tesla, it played out just like this on the last CPI where it didn't respond to any upside. If you notice today, even though the market in tech ran up the last couple of days, well, Tesla's been selling off. It did the same thing November 9th or the week of November 9th and 10th. And then once the CPI was good, it was able to kind of, knock itself out of this little snap. So if the CPI is good tomorrow, this one is a huge lagger, and I think it'll have a lot of upside. However, if that CPI ain't good, Tesla's probably going to break the piggy bank and hit a new 52-week low. So we'll see what happens. Shout out to Elon. We're going to find out, but that is the first play. Then play number 2, I brought this one up yesterday. I really like it. It is XLU, the utilities, and now given that we're waiting for inflation and how the economy is going to play out here, I think this will be very sensitive to the reading just given the defensive nature of the stock. So I'm going to be using this one as a proxy to kind of see how people really feel about the move. And my plan is if this report is good or the report gives something that, gives a nod to the defensive stocks, I am going to try to go for the double dip. I was supposed to go for it today. I thought it would get a little bit cheaper, but I ended up hesitating. And then, well, yeah, so still up though. I like it, but that is going to be play number 2. And then finally, play number 3, baby. This one's my favorite, baby. The bonds. So why I like it is you remember how I kept freaking out about the bonds and like everything, and I was like, oh my gosh, they're like disconnected, and then the inverse. Yeah, you should remember that. Shout out to people watching the watch list. What do you notice about today? Look at, they're coming home again. Do you think about it? Oh, I don't usually do that on the watch list. My bad. But the point is they're matching up. The bonds have been dropping. The market's still a little low, but I like this because now bonds are down, following in line with the stock market here. This little fear bid on the bonds, it disappeared. Does not mean it can't show up after tomorrow or Powell, especially Powell, but this is one thing that I'm thinking here is that they should match up tomorrow, and they've been showing those signs lately. So if the market goes up, watch for the bonds to go up with it. If the market goes down, watch for the bonds to go down with it and just go back to what has been normal for 2022. So with that being said, if I am correct, I could be incorrect, but if I am right, this is going to be a killer lag play in the sense that if the market shoots up, it did not move up as much as it did the other day. People might start running into it, but now they're following the correlation as opposed to buying it out of fear when the market was dumping, 2, 3, 4%. So keep that in mind. But if the market ends up bearish, there will also be an opportunity to short the bonds as well too. So I really like this as a lagger. I think it offers a lot of hope, especially if you're confused on what to play. This one will move a little bit slower, and you could wait for everything to happen, and then you really might get an easy play through the bonds. So TBT, TLT, TMV, IEF, there's a lot that you could go over, /ZN for the futures, /10Y. But again, hopefully, this is why we want you to pay attention. We've been covering it a lot, baby, so it's going to be exciting. But those are the main plays as far as everything else. I got a couple I want to show you. I have them broken down here, but I really realized I thought I sold Amazon. Apparently, I still have that one to the upside. We had a couple of plays move up. Again, that ES from yesterday, it dropped a little bit here. It was almost, I was only down like $700 on it, but we made most of the losses back, and really, I'll start with this one. My plan on this play is to ride it out throughout tomorrow. I mean, maybe if I have a gain and there's a melt up tomorrow, I may be tempted to sell it, but in my mind, I was already down $11,000 on it, so I was willing to deal with it. The fact that we just shot up 1.5%, this might protect me for the first candle, so I'm willing to lose $10,000 if it ends up being bad. But if we do get that pop like last time, again, last CPI, we made about $9,000 on that first minute. It ended up being good, but last CPI, I also had a short insurance play, and well, that's something I did today. Remember that NQ I had to protect myself? Well, after some of those Fed and consumer expectation numbers came out, I closed my hedge play because I didn't want to get locked in on the other one, but I closed it out there for about a $1,000 loss. So now I don't have any insurance, and that's why, depending on where we're at pre-market tomorrow, I will have that opportunity to hedge, or I'll just save the money and then wait till we get the event. And then, again, if it's an easy read, I could just play the trend on either or. So I am taking a lot of risk. I do not recommend this. This is not a recommendation, but hopefully you can learn, and hopefully you've been able to learn how we've gone about all of it. But as far as the other plays that I made today, I shorted 100 shares of Apple, 141, and then I used that as an opportunity. I said, okay, let me get that short. And then I opened, or I closed out the NQ, and then since I didn't have that short anymore, this was a long play on Bowen from Friday. I made about $1,000 on it, $815 net profit on the shares, and then we also did the options, sold out half of them for free, got my $200 back. So thought that was decent. And then I opened up those Tesla shares at the end, but like I'm saying, I have a bunch of random plays here. So here's all the UNGs. I still have the PRVB. I am still short on the Netflix, down 400 coming into it. The RTX just jumped after hours, so we still got that. The utilities, they are still up, down $100 on the Amazon, down on the, or up on the yen, but then I should be down on the euro or the pound. And the oh wait, did they close me out of that one? Nah, it's right here, down 7. But again, minus that with how the yen is balanced out, it's pretty much the same 5K from a couple months ago. But I'm going to roll both of these over, but we'll see how this plays out tomorrow. Still down on the Disney, getting ready to take the tax losses on Coinbase, even Roblox too, but they've been holding up. And then there's some of the older plays, old EWG Insurance. The Activision is down 177. The AMAM, that breast cancer stock, down 12. Qualcomm still down, and then the short from today on Apple lost about $300. So that's pretty much everything, even the ES as well. I think I'm positioned fairly nice. I have a lot of money to throw at it as well, too, and this is literally what I will be holding. Hopefully the Tesla acts as a lagger. If we want to go for anything, I will be looking at those bonds as a lagger, and then read the data, play with it, and even if we get the reads wrong early, you're going to get a lot of whipsawing back and forth. There's the opportunity to, brush that dirt off your shoulders and get back to it, baby. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember you're made for this, Chad, okay? A lot of people have been coming in, and I see a lot of y'all, and I hope you know I have more faith than you do in you sometimes. Some of y'all, you already got that covered. So, hey, man, don't let me play you like that. Maybe I don't feel you, but what I'm trying to tell you, you have seen this before. It's a big event. We get excited. We love to do it. It's going to be great, and we're going to be there in the morning. But, take a step back. You've seen this before. You've seen good outcomes. You've seen bad outcomes. You've seen confusing outcomes. Don't give in to the emotions and think about the final boss afterwards. But, Chad, you are ready. The only one who will take you out of this game will be yourself. Keep enough money for the next move. Give it a little bit of time, and let's close this out strong so we could get into 2023, baby. But drink that water. Stay hydrated. Stay healthy. I'm going to see you early in the morning. And I love you, Chad. It's game time. Let's get it, baby. Horn.